Hello, my name is Jeremy Bramwell, and welcome to the video preparing for your draft meeting. Draft meetings are very, very important because there's a lot of people interested in the depreciation report. Owners and tenants, buyers, insurers, realtors, and lenders. So you have to make sure that the report is very accurate and it's very realistic. And this is the purpose of a draft meeting, that the component classifications are correct. There's accurate physical information. The opening financial information is correct. It's standards-based financial modeling. There's a transparent benchmark report. There is a recommended funding plan, and the financial health of the Strata Corporation is benchmarked throughout the report. Lastly, you have to make sure that the Strata Property Act is being followed. The process for preparing for a draft meeting is simple. You read the draft copy of the report. You check to make sure the historical data is correct. You understand the financial implications of the modeling, and then you create a list of questions and email them to your provider before the meeting. So the component classification needs to be accurate. That means that they're allocated by type, and that is the age defined, their contingencies or allowances, or their one-time costs. The threshold amount should be appropriate, and it should be realistic for your size of complex. Anything that's under the threshold level should be noted in the report in case it changes in a later report, just to know that they're there. The physical data needs to be accurate. The historical data, that is when the components or assets were renovated or replaced or acquired, needs to be correct. The unit counts need to be correct. That would be the number of doors, the number of windows, how many square feet of carpet is in the building, how big is the outdoor parking, that sort of thing. The financial data for year one also needs to be accurate. So the CRF balance is correct for year one, and the annual contributions for the current year are correct, assuming that you've ordered it in the middle of a year. Now, if you've ordered it prior to year one, of course, the annual contributions will be estimated by the depreciation report consultant. Quotes for future planned work are correct. Sometimes we find that stratas have already got work planned out and they've got an actual quote. It's a lot easier if that quote is given to the provider in advance. Therefore, it'll be correct in the report. The financial modeling should be standards-based. So what I mean by that is the financial assumptions that are used need to be realistic. That's the construction inflation rate, investment interest rate, the contribution rate. The funding principles need to be followed. That is that there's always sufficient cash in the CRF. The contributions are stable. They're not going all over the place. They're evenly distributed to be fair to everybody, and it's fiscally responsible so that the Strata Council doesn't get voted out the next year by a bunch of people who are furious at increases that really aren't realistic. The benchmark report, otherwise known as the Schedule A, needs to be transparent. So the only way that financial health of a Strata Corporation can be calculated is through reserve adequacy or percent funded. For that to occur, you've got to have a complete physical analysis and you've got to have a complete financial analysis within the benchmark report, or it just doesn't work too well. Now, in the Strata Property Act, it doesn't talk about there being a recommended funding plan. In British Columbia, it just says that there has to be 3 funding scenarios. But anybody following any set of standards will have a recommended funding plan so that the Strata Corporation has some goal to work towards. But that recommended funding plan has to be financially responsible. The increase in the annual contributions have to be realistic, and the resulting special levies spread out as much as possible. Now, we went through this earlier, but the statutory contribution rate will always lead to financial disaster. That is the minimum requirement of 10% of the current year's operating budget. No plan should encourage this. The calculation of the financial health of the strata. So we talked about this a couple slides ago. Again, this is not in the Strata Property Act, but is required in most reserve planning standards. This reserve adequacy is not only presented in the recommended model, but needs to be presented in all three funding scenarios. And why I call them funding scenarios is the expenses will be the same thing in every scenario. It's just how you fund to pay them can change in each of the scenarios. So that's why the legislation says three scenarios, but they're actually three funding scenarios. The Strata Property Act must be followed. There must be an executive summary. There must be three financial scenarios, and it must be signed by a qualified person. Now, I will give it to you that the qualified person rule comes into effect as of July 1st, 2025, but it makes no sense not to use a qualified person today. Remember, this is a permanent document that can never be thrown away. The depreciation report will always be a part of the Strata records, even when replaced by a new report. So to give you an idea, if I come in and I buy a unit in the year 2030, I should be able to look at every depreciation report there is that strata has ever ordered. If you got questions about the report, there's no such thing as a bad question. Forward the questions before the draft meeting at least 72 hours in advance to give the people who are going to talk to you at the draft meeting a chance to review your comments, and then maybe they'll all discuss them at the meeting. Now, we do have some common questions, more administrative type. Does the property manager need to be there? The answer is normally the property manager does not need to be there unless the council wants them to be present. This is the Strata Council's option. Another question we get a lot is, should the draft meeting be part of the regular council meeting? We have found that over time that the draft meeting should be set up as a separate meeting. The reason for this is there can be a lot of discussion that isn't expected, and it can just push the time markers beyond what people are expecting, and then the council doesn't have time to go through the business that they've already set up the council meeting for. As a result, we always recommend that the draft meeting should be set up separately. I hope you enjoyed this video. Strata Reserve Planning is one of BC's oldest and largest depreciation report providers, with staff and offices in Vancouver, Victoria, and Vernon. If you have any questions, please email us at clientcare@stratareserveplanning.com or give us a call at any of the offices. If you enjoyed this video and like to keep up to date with new videos as they come online, please go to our YouTube channel at YouTube@Reserve Planning and subscribe to the channel. Thank you very much and have a good day.